The Russian-Ukrainian crisis has affected many people and things, but the major blow from it came toward the cryptocurrencies. Bitcoin, along with many other crypto, suffered huge losses. However, the tides have turned recently. According to Billionaire Novogratz, cryptocurrencies are boosting now, and the dollar is blunting. But how is that happening? Let's find out. Hey guys, welcome back to our channel Crypto Meister, where we tell you all the latest news about your favorite crypto coins. In today's video, we are going to talk about why Billionaire Novogratz thinks that the war is blunting the dollar and boosting cryptocurrencies. If you want to find out more about it, then stay with us until the end of the video. Also, before we start the video, don't forget to hit the like, subscribe to our channel, and ring the bell icon for more amazing videos. And let's get started. The developing war in Ukraine introduces new and significant volatility to the crypto and the stock markets. The crypto market has been increasingly tracking the stock market lately, which, combined with more mainstream adoption and the slumping prices we've seen to start the year, makes it even more intertwined with developing circumstances in Eastern Europe. So Bitcoin is back over $40,000, following a drop below $35,000 after Russia's invasion of Ukraine recently, while Bitcoin's price has seen multiple big drops since November. Its new highs in 2021 and current price are still an impressive feat, considering its humble beginnings and a price below $10,000 as recently as just July 2020. On the other hand, Ethereum, which is the next most popular crypto, has been notched under new all-time highs of its own when it went above $4,800 in November. Though Bitcoin and Ethereum have both had ups and downs, short of their all-time highs, since then, many experts still expect Bitcoin's price to exceed $100,000 at some point. The volatility highlights a durable truth for Bitcoin, as it is still a highly volatile and speculative investment. In fact, the last time the original cryptocurrency set a record high in mid-April, it abruptly lost over half of its value and plunged to around $30,000 by mid-July. Similarly, Bitcoin dropped back below $35,000 this month, not long after its most recent November high. So what should crypto investors do in light of this volatility? Nothing, according to experts we've talked to. Given the crypto's history of volatility, this increase doesn't guarantee a long-term reversal. Bitcoin's price is just as likely to fall back down as it is to continue to climb. The future of cryptocurrency is sure to include plenty more volatility, and experts say that's something long-term crypto investors will have to continue dealing with. Now, let's talk about how cryptocurrencies gaining momentum is affecting the dollar. The recent surge in Bitcoin trading using the Russian ruble and Ukrainian hryvnia has bolstered advocates' case that a decentralized currency can offer refuge when access to traditional banking breaks down. In addition, the invasion and sanctions against Russia could push more regular people toward crypto, Novogratz said, while making clear that doesn't imply Bitcoin is being used to avoid sanctions. According to the founder of Galaxy Digital Holdings, we've never had a group of nations, in essence, confiscate real estate from Russian tycoons. This sends a message: I want to have money that lives outside of traditional power. That's why Bitcoin was created, because people don't trust governments. The world's largest cryptocurrency has decoupled from risk on assets recently, aiding narratives the coin could be viewed as a store of value, uncorrelated to the broader market. While still elevated at 0.55, Bitcoin's correlation with the S&P 500 has backed down from a high of 0.7 earlier this year. Some analysts have attributed sanctions against Russian banks, companies, and wealthy elites, and the subsequent economic fallout as driving a rush into digital assets. For onlookers like China, there are lessons to be learned in relying on the US dollar, Novogratz said. I'll tell you one thing, you are going to sell your reserves before you invade Taiwan, he said. This is a big deal in a lot of ways. This is starting the acceleration of the de-dollarization of the world. Despite falling back significantly from its latest all-time high price, many experts still expect Bitcoin's price to rise above $100,000 at some point, describing it as a matter of when, not if. Shortly after Bitcoin's latest all-time high in November, Ethereum marked its own new all-time high when its price went over $4,850. Ethereum has seen similar volatility following the latest high. So what does this price drop mean for crypto investors? For those who invest in crypto for the long term using a buy and hold strategy, price swings are to be expected. Big dips are nothing to be overly worried about, according to Humphrey Yang, the personal finance expert behind Humphrey Talks, who says he avoids checking his own investments during volatile market dips. I've been through the 2017 cycle too, Yang says, referring to the crypto crash of 2017 that saw many major cryptocurrencies, including Bitcoin, lose major value. I know that these things are super volatile, like some days when they go down 80%. Therefore, experts recommend keeping your cryptocurrency investments to under 5% of your portfolio. If you've done that, then don't stress about the swings, because they're going to keep happening, according to Bill Novo, Chief Technical Analyst at Token Metrics, a cryptocurrency analytics platform. Volatility is as old as the hills, and it's not going anywhere, Noble says. It's something you have to deal with. As long as your crypto investments don't stand in the way of your other financial goals, and you've only put in what you're ultimately okay with losing. Yang recommends using the same strategy that works for all long-term investments: set it and forget it. If this type of extreme drop bothers you, you may have too much riding on your crypto investments. You should only invest what you're okay losing. But even if the drop is making you rethink your crypto allocation, the same advice still stands. Don't act rashly or upend your strategy too quickly. Reconsider what you might be more comfortable with going forward, such as allocating less to crypto in the future or diversifying through crypto-related stocks and blockchain funds rather than directly buying crypto, though you should still expect volatility when cryptocurrency markets fluctuate. Don't check on it. That's the best thing you can do. If you let your emotions get too much into it, then you might sell at the wrong time or make the wrong decision, says Yang. Now, what should investors know before investing in crypto? If you're investing in cryptocurrency, expect volatility to continue. That's why experts recommend keeping your crypto investments to less than 5% of your total portfolio. I know these things are super volatile, like some days they go down 80%. Humphrey Yang, the personal finance expert behind Humphrey Talks, previously told Next Advisor. But if you believe in the long-term potential of Bitcoin, just don't check on it. That's the best thing you can do. Just like you shouldn't let a price drop influence your decision to buy crypto. Don't let a sudden price increase alter your long-term investment strategy. Even more importantly, don't start buying more crypto just because the price is rising. Always make sure your financial bases are covered, from your retirement accounts to emergency savings, before putting any extra cash into speculative assets like Bitcoin. Bitcoin's latest big jump also isn't anything new. While in the long term, Bitcoin's price has generally gone up, we experience a lot of volatility along the way, says Kiana Daniel, founder of Investiva. Now, what's behind the latest Bitcoin drop? Many investors see Bitcoin's price swings as part of the game, but volatility is tough for individual investors to deal with, Noble says. Some of the drops have been caused by a combination of factors, Noble theorizes, from excitement about low-quality coins, to negative remarks about Elon Musk, to China's recent crackdown on crypto services. The mix of factors has potential to make sell-offs all the more violent, says Noble. He likens the drop to the stock market crash of 1987, from which the markets took months to recover. But because crypto moves a lot faster today than equities did in the 1980s, Noble says we might see a quicker recovery. So it's a cycle which keeps on repeating itself, with some currencies falling down and some rising up. However, analysts are pretty hopeful that once the Ukraine crisis is over, things will get back to normal for both dollar and cryptocurrencies. And this is it for today, guys. What are your thoughts on today's video? Share with us in the comments below. Also, don't forget to hit the like, subscribe to our channel, and ring the bell icon so you don't miss any of the latest updates. And thank you for watching.